Hello and welcome to the Morningstar series Ask the Expert. I'm Emma Wall and I'm joined today by Morningstar's Jose Garcia Zarate to talk about ETF flows. Hello, Jose.
Hello.
So it's been a record 6 months, the first half of 2017 for ETF fund flows, hasn't it?
It has, actually. We've got close to 58 billion euros in net inflows. And, when you compare it to, the record high year for ETFs, which was 2015, for the whole year, we were basically totting up about 70 billion. So it would need basically things to get really bad in the second half of the year for 2017 not to be a new record year for the European ETF industry and the ETF industry in general, because we know that in the United States they're really flying high. And
they're doing better in terms of inflows than a lot of active funds as well, aren't they?
Yes, I think, as I said, I'm not sure whether there's cross-pollination from what is happening in the US, which is a bit of a revolution, quite frankly. But, all these messages about, low-cost investing, the flexibility of the vehicle are, slowly but surely getting through to the European investor base, which is great news.
Let's have a look at where this record money is going then. What ETFs are European investors buying?
Well, mostly equity this year. This year is a return of equity. Last year was, the year of fixed income because of all the risks surrounding the global economy. This year is more the year of equity. Interestingly, we've seen different patterns between Q1 and Q2. For example, in the US, Q1 was the period where a lot of people were willing to put money into the Trump trade. Let's hope for good things for the United States. Q2, we've seen outflows on US equity ETFs, which is interesting. I just wonder whether investors are perhaps losing patience or taking some risk mitigation positions for what they see as inactivity or potential paralysis with the Trump administration. We'll have to wait and see. But most of that money has actually gone into US fixed income, which is the classic risk, aversion trade. Eurozone equity is doing very well as well. UK equity is suffering because of Brexit. But it's mostly equity, emerging markets as well, doing very, very, very well. I think the dollar weakening against most major currencies, particularly in Q2, has helped emerging markets a lot.
Let's have a look at that European base, though, because I know there are some country differences within that sort of European equity ETF space. Which countries are being favoured by ETF investors?
Well, this is quite interesting because this is the unsung story of the year, or perhaps more than this year, even last year, that the Eurozone economy is actually doing very well, and that's actually quite surprising because, when you read the media, you still hear, the Eurozone economy is in the doldrums. Actually, it's doing very well, thank you very much. So what we've seen, interestingly, is outflows for ETFs providing exposure to the German equity market. Now, I don't think it's related to the fact that the German economy is doing badly at all, because we know it's actually doing very well. I think it's risk reversion. Basically investors saying, okay, all the risks surrounding the Eurozone economy, particularly political, have gone out of the equation.
Things like the French election going well, that risk has abated.
The Dutch election, the rise of populist policies, etc. And also, I don't know, perhaps, they're seeing that, the risk of the European Union further disintegrating because, peer pressure or some countries following the example of the UK has pretty much dissipated. And investors are seeing opportunities in national economies other than Germany. So you see, that the Eurozone as a whole is doing very well, but money is actually coming out of German-only equity ETFs at the moment.
And then quickly on emerging markets, because we are running an emerging markets week this week, is it the equity ETFs that are doing well, or is it emerging market debt that we're seeing inflows?
I think it's both. It is both. You can see on the equity side, I think, obviously, because the economies are actually doing pretty well, and also because of the dollar is weakening against major currencies, and that actually helps the emerging market story. On the fixed income side, there is still the overriding search for yield, and if you want yield, and the emerging markets are the obvious place to go.
Jose, thank you very much.
You're welcome.
This is Emma Wall for Morningstar. Thank you for watching.